I don't think people understand this Solana fire dancer. And again, not just picking on Solana because I'm long of it, but it's just like they're thinking that Solana's theoretical TPS is 65,000. Fire dancer takes it to 1 million. And it was built by Jump Trading. And the idea is you can therefore use blockchain for high frequency trading. So therefore it can be used for all exchanges. And if you think about the mess of FTX, we need exchanges on blockchain. We need the recorded ownership of assets. When Lehman Brothers went under, everybody's got a claim on the collateral, and there's 35 claims on the same piece of collateral. Right, this sorts it all out, automatic settlement of everything. We've seen that in DeFi. DeFi is a great experiment in showing that everything can automatically settle and contracts can resolve.
Raoul Pal, the founder and CEO of Real Vision, has been a dynamic figure in the digital asset arena since his initial foray into Bitcoin in 2013. Like many participants in this space, Pal shows a strong optimism towards a variety of assets, particularly as the market transitions from the early stages of growth, often referred to as crypto spring, into a more mature bull market phase. In recent months, there's been a significant focus on Bitcoin, the leading cryptocurrency. This heightened interest began last June when BlackRock, the world's largest asset management firm, applied to the U.S. Securities and Exchange Commission for permission to offer a Bitcoin exchange-traded fund. The SEC approved this request, and despite recent dips in Bitcoin's price, analysts remain hopeful about its potential in the upcoming months, especially leading up to the halving event and beyond. Pal, while not heavily invested in Bitcoin, shares a bullish stance on this leading crypto asset. His optimism extends to other cryptocurrencies as well, all of which he believes could offer substantial returns to investors in 2024 and beyond. Solana, in particular, stands out on Pal's list. As a former Goldman Sachs executive, Pal has voiced strong confidence in Solana's future, especially since learning about FireDancer, a new validator client for the Solana blockchain. Currently, Solana's network relies on a single original validator client developed by Solana Labs. FireDancer is seen as a long-term solution to past network outages experienced by Solana, aiming to enhance network performance and add a layer of security by reducing the risk of software-induced outages. Pal predicts that Solana could rise by almost 50 times before the end of the bull market. He is also optimistic about several other cryptocurrencies and digital assets, including NFTs. Here is Raoul Pal's latest interview with Anthony Pompliano, where he discusses his perspective on crypto assets like Ethereum, Solana, and XRP. Please take a moment to like and share this video, subscribe to the channel, and activate the notification bell for more content. Your support aids in the channel's growth and helps with the YouTube algorithm. Thank you, and enjoy the video.
I'm very overweight Solana because I could see it survived the worst nuclear winter, and the developers were very active, the community was very active, and then they made some big tech breakthroughs with being able to mint 1 million NFTs for $100. And then FireDancer, which kind of changes the entire game again in terms of speed and cost. So I think that's why I've backed that horse, and still having Bitcoin and still having Ethereum. And then there's a bunch of new stuff, out of Sui and Sei and Polygon, and there's just so many things. And the answer is I don't know. It's difficult. That's one of the reasons I set up the asset management business I got, Exponential Age Asset Management, was because this bit is difficult. It's easy to own the top 3 or 4 and not fuck it up. It's very difficult to choose the winners unless you're in it all day, understanding everything. And so the idea I had was to start an asset management business that just invests in crypto hedge funds. So it's a fund of funds. So they actually are doing the work to find that, because otherwise it's actually really difficult to do. Again, we've all got proof in our wallets that we thought we were onto the next big thing, and it wasn't. But in terms of, is it a winner takes all? I just think we can't tell. I doubt it. I doubt it. I think different chains will be used for different things, but it will probably end up being a total of 5, take 80% of the market. I mean, XRP is another one. It has use. There's plenty of use, but it's not the best performing asset. It's a blockchain that gets used. There's a bunch of others with big market caps that aren't used at all, just for for fun, I mean, you could use Doge. I mean, it's just, I mean, Elon may use Doge for payment systems or whatever, some way, shape or form. But Doge's got huge market cap, just driven by retail investors. It's bananas, but this is the space we're in. And I think the whole space, the meme is really important. I mean, the best meme Bitcoin ever had was not digital gold, it's number go up. Right? I mean, that's such a powerful meme, right? And people get it. And so memes are really important because these are new things and people don't know how to really place them in the mental framework. But then it's kind of a child of the internet too. So, dog with hat is like the big meme coin of the moment. And that's fine. It's kind of pure speculation and culture. It's the value of culture. But the problem is it can die so quick, the culture of one thing, and others are pervasive like Doge. So it is really hard to do, but my God, you can make a lot of money. And in my 10% DGen portfolio, I've got a couple of those that are just memes that I think could work, but it actually takes a lot of work. So a few of my friends are really good at doing this. They really focus on the meme. I try and look at the meme that might run for a year or a year and a half, as opposed to the meme, because some of these will do 50x in a month and then disappear. So it's hard, and I don't like people to do it unless they really know what they're doing, or if do it with the 10%, because that's one way of fucking it up. You just think you're on to the next 100x, you put all your cash in, you get rug pulled or whatever, and before you know it, you've lost all your money.
Pal holds a positive outlook on non-fungible tokens, NFTs, as well. He believes that the NFT market will experience a resurgence, potentially matching the heights it reached in 2021. However, he advises caution, noting that this boom in NFTs is likely to occur only when macroeconomic conditions significantly improve. Pal likens NFTs to luxury items such as high-end wristwatches and vintage cars, pointing out that these types of assets typically become more attractive to investors when the economy is thriving and markets are at their peak. In his conversation with Pompliano, Pal also highlights a clear link between broader economic conditions and the crypto market. Drawing on his experience as a former Goldman Sachs executive, he observes that Bitcoin halving cycles, general business cycles, and U.S. election cycles are all intertwined, with a convergence expected around 2024 and 2025. Now, let's go back to Pal's video, where he delves deeper into his expectations for the upcoming crypto bull market. He specifically addresses recent movements involving institutional investors and the reawakening interest among returning investors in the crypto space.
To get phone calls.
Okay.
Which is interesting, right? Once you start to get the phone calls, because there's a bunch of them that deep in the space, like Alan, he's deep in the space. A bunch of them have people who are already operating, this bucket for them. So, they're always around, the Paul Joneses and the Stan Druckenmillers, they'll be periodically in and out. They're agnostic. They get it, but they're traders. You've got the Lewis Bacons of this world who have teams of people doing stuff, as do a bunch of them. But then there's the other kind of billionaire crowd, which is the other hedge fund managers or just the general billionaire crowd. And a lot of them came into it for the first time last cycle, had their mettle tested, were like, God, this is not easy, but I know they'll be back. So I'm getting quite a few phone calls from that crowd as well, which is like, hey, should we get back in, and what should I be thinking, and how should I be doing it? What does this all mean? So I think that they'll all be back in. And I think this time around, they'll stay because now they understand it. You've got to go through a cycle to understand how this asset works. So I think they'll stay this time around, and they'll figure out how to deal with it. I've done a lot of work from Global Macro Investor, which a lot of these guys are all subscribers to. And I've basically proven that crypto is a macro asset. It's driven by the same forces of liquidity. And you relentlessly show that there's a narrative, which is like, this is funny internet money, blah, blah, blah. And you show them it's exactly the same forces. So you can use global M2 or liquidity, whatever thing. And then you start proving, okay, had you used the same macro tools and chosen different assets, what are the outcome? And you find that even on a risk adjusted basis, crypto is like 5 or 10 or 20x better. It's like that. I think you tweeted it out as well. Fidelity put that hilarious scatter plot of risk rewards of all the assets in the little bottom left. And then you kind of don't realize, but you have another look, and right up at the top right is Bitcoin. It's right. It's ridiculous. I think the main driver of this whole space in terms of private capital has been family offices, because they don't have a mandate. They can do what they want. So we've seen and continue to see the family offices drive the VC business and the hedge fund industry. The institutions are still few and far between. You know, the guys at Texas teachers, there's only a few that have really allocated, and nobody's done a big allocation. There's a lot of noise that the Middle East is doing stuff, but I don't see many people actually coming back with tickets. So I think that's still to come. It feels that, you know, because if you think about how the world works, even when we look at from XPAM, the hedge fund side, none of the hedge funds are on like the Cambridge Associates platforms and the big platforms. They just haven't done crypto. So the traditional way of some giant pension fund going to Cambridge Associates, finding what the right hedge funds are, and having Cambridge do the due diligence and then allocating doesn't exist right now. So they don't really have a way of doing it unless you've got some sort of pioneers within the shop itself. So it still feels like the major institutions of that type, we'll see more this time around. Yeah, we saw a reasonable amount last time. We'll see more this time around. It's probably the cycle after that. I think the ETF is a good thing because I know there's a lot of rogue fund managers who know that they can hoodwink the risk manager by saying, I've just got an equity. It's called IBIT. It's an equity. You don't know what it is. And it's Bitcoin, right? They will do that. There'll be a bunch of people who do that. And eventually they'll get the mandates to do it properly.
2024 is shaping up to be a crucial year for Bitcoin and the broader cryptocurrency industry. This is the year of the much-anticipated Bitcoin halving, an event historically followed by significant price increases for the leading digital currency. However, according to Raoul Pal, the most promising development for this cycle might be the end of the Federal Reserve's quantitative tightening and the onset of what he terms a macro and crypto summer. Renowned for his macroeconomic analysis and as a prominent investor, Pal suggests that the upcoming year will compel the U.S. government to take action. He anticipates that the Federal Reserve will either need to cut interest rates and end quantitative tightening, or implement a strategy akin to Japan's yield curve control. Such moves would inject more liquidity into the market, potentially leading to substantial price gains in the cryptocurrency sector. Pal, the founder of Real Vision, believes that the combination of the Bitcoin halving and the expected influx of liquidity from the Federal Reserve and other central banks will have a profoundly positive effect on crypto assets. He predicts this could trigger one of the largest, if not the largest, crypto bull markets ever seen. Pal forecasts at least 18 months of a massive bull market, during which prices could skyrocket. What do you think about Pal's outlook and predictions for cryptocurrencies like Solana and Bitcoin? Feel free to share your thoughts and observations in the comments section below. Also, remember to like this video, subscribe to the channel, and activate post notifications for more content like this. Thank you for watching.